Well, hello and welcome to this week's update. What did we see in the markets? Well, we saw a rebound higher. On Friday, the S&P 500 was up more than 3%. Anything more than 1% in a day with an index is significant, so pretty big day to the upside. We've got our opening range here that's been set from the third Friday of the month. We're now in bullish opening range mode. We closed above the 21, and certainly that was a bullish development. Short term, what could happen? Well, we've filled this gap here on the SPX, and we could very easily come up and fill this gap here at around 4,010, somewhere around that area. Okay, so I think we could easily come up and fill that gap. If we have a look at the QQQs, which we made some very good money last week bearishly, and then we closed our positions out, locked in the profits. We'll talk about that in a moment, but we've now moved back up above that 50% retracement level from the lows in March 2020 to the highs, and we've now broken above that, and we've broken above the 21 EMA on the daily chart. So that's relatively strong, and there's a gap to fill overhead at around 300. Okay, so short term, if we have a look here at high yield bonds, cannot be as easily manipulated as the SPY, but you can have a look here. We've got higher low, higher low, higher low. So looking at the hourly chart here, we are seeing some strength in the high yield bonds and looking for the markets in the short term to potentially move higher from here. Not long term, but short term. I'm talking for the next week or so, we could still see some further upside movement. What did most people think? The markets were going to go down. So we were in bearish positions. We made great profits, and we took our money while it was available. That's part of being a consistently long-term profitable trader. When the market makes money available to you, you have to have a systematic way of being able to lock that money away and put it in your account where it's safest, right? So some of our members did that from last week, and you can see we've been doing very, very nicely. Our total position so far, 36 winners. These are our last 42 trades, 36 winners, 5 losers, and 1 break even. We're doing very, very nicely. And I've recently done an interview with Gerald Celente, the amazing trend forecaster, and he was sensational in the interview that we did. We got a lot of great feedback from it. Only goes for an hour. Go check it out. It's on our YouTube channel, and I think you'll get a lot out of it. What's happening right now, where we're likely to move. And then I actually do a presentation afterwards. If you click on the link below in the description, you'll be able to actually hear a presentation that I did, in my views about what you need to do to protect yourself and your loved ones from high inflationary environment and in uncertain economic times. So go check that interview out on YouTube, but also the fact that, Tom made, over a 50% return on his SQQQ trade that we got into last week. He made thousands of dollars, right? Thousands and thousands of dollars profit from that trade that we gave last week. Here's another one of our members, Sue. She made $199 profit from the put debit spread that I mentioned on the QQQ, a bearish put debit spread, and she did very, very nicely. So many of our members making incredible amounts of money with those bearish trades that we had on last week. We had the QQQ puts, the QQQ put spreads. We had the SQQQ, which is an inverse ETF, moves opposite to the QQQ. We had calls on that, made incredible money on that, and then call debit spread on the SQQQ as well. So we did very well with all of those trades and a bearish trade on NLOK. So this week, what I'm looking to do is set up, that was a trade that we did last week, 58% return in a week, which is fantastic. I'm looking to do a very low risk trade right now, because short term, yes, I think we're going to move up again, but we could very easily reverse, so we've got to be mindful of that. So I want to get into a trade that has a very high return, it has asymmetrical risk working in its favor, and we don't have to outlay a lot of money to get into it. So what I'm going to do here is set up a call debit spread on the QQQ, looking for it to fill that gap at around 300 on the daily chart. Right now, the price is $294.61. We're going to enter on Monday, and the expiry I'm going to choose is the 15th of July, 19 days from now. So our aim is for it to move above $300, or at least move higher from where it is in the short term. Okay. We're going to sell the 300 out of the money call and buy the 298. So it's an out of the money call debit spread, which doesn't involve a lot of risk. Yes, it's a lower probability of success, but the actual amount of money we're outlaying is much lower because of the fact they're both out of the money. So we're going to spend $91 a contract. So, if you do one, it's $91 that you'll be risking. If you did 10, it'll be $910. Okay. So our potential profit is the maximum value of the spread, the difference between the sold strike 300 and the bought strike 298, $2 minus what we paid for it, $91 a contract, means we could potentially make $108 here, or 117% return on our risk. The break even at expiry would be the buy strike price, 298 right here, plus what we paid for it, okay? Plus what we paid for it for $91 a contract, $298.91 with the break even at expiry. When's expiry? The 15th of the 7th, 19 days from now. So I'm going to set my stop on this one at $41 a contract. We're spending $91 a contract, set our stop at 41. So $91 will go out of your account to buy the spread. If it moves down rather than up, the QQQ, then our call debit spread will be worth less. If it falls in value to 41 cents or $41 a spread, it will automatically close the trade out for you. Thereby, you would lose $50 a contract. So our potential risk here is $50 a contract. Our potential upside is $108 a contract. Our potential profit is twice as much, more than twice as much as our risk. That's an example of asymmetrical risk. If you keep structuring your trades with asymmetrical risk, you will make money long term. So that's a new trade that we're looking to get into here on the QQQ. Short term bullish, but long term we could very easily start selling off again. I mean, all the internals that I look at, the combined put call ratio, the 10-day moving average is at 1.08. That's neutral. The skew, the perceived risk of a 2 standard deviation move or more down in the market, in other words, a market crash, is 120, which is neutral. Right? They're not too worried about it right now. And the trend, which is the most accurate overbought, oversold reading on the stock market, is 1.4, and that is neutral as well. So the amount of stocks that are above their 50-day moving average just a week ago was only 12%. Now it's almost 32%. So it's starting to get a little bit of strength there. But again, I think this is very short term. Short-term move up, maybe just for a week, and then we will reassess things then. As far as inflation goes, the Australian Treasurer has come out and said that he sees inflation going to 7% this year. Now that's the official number. We know that the real number is much higher than the official number. We won't get into that now, but have a look at that Gerald Celente interview that I just did last week on this YouTube channel, and you'll understand my reasons for saying that. So that's what's going on there. This will get worse. You've got to be in charge of your own financial future. Understand this. Start to be able to make money whether it goes down, like we just did last week, and then set ourselves up to make money as it moves up again, right? We don't mind whether it goes up or down. We can still make money. Whether there's a lockdown, whether there's not a lockdown, irrespective of high inflation, low inflation, we have the skill set now to be able to make money in any one of those scenarios. And that's what you need in this day and age. You've got to be flexible. You've got to be self-sufficient, and you've got to understand what's going on, because the government isn't there to protect you. They're not there to help you. You need to take control yourself. No one's coming to rescue you. So get these skill sets. Very important that you do that, and I would encourage you to get educated on this. So that's what we did this week. I really appreciate you guys listening. We will look at where the market is next week, and we will set up some new positions then. But again, we don't mind. If it's up or down, whatever the case is, we will be making money. All right, guys, thank you so much for listening. Talk to you again next week. All the best, and bye for now.